And this is my favorite. Okay, as a CPA, I am going to go on record saying that bookkeeping is tedious. It's not the most fun thing to do. It's not. It's not sexy at all. You know, I get it. When I'm doing it, I got like a candle lit. I got like music playing in the background. I got like all these things to like make me feel just good and like in the environment, like the aura is good. So I can get through this thing, right? But I get it. I totally get it. All right. But trust me, we don't do it for the sake of it. The real magic comes after you do it, right? After you do it, then you can run a report, run your financial statements, and you can be able to see what these numbers are telling you. You've done the bookkeeping, you got financial statements in front of you. The one we're really going to talk about today is the profit and loss, or the P&L, or it's called the income statement as well. When you see how much money you made and how much you spent, that is what the eye opener is, to know how you performed. You couldn't do that if you didn't do the bookkeeping part first. But the result, that is what's sexy, the data, right? So let's talk about financial analysis. Is using your financial data to assess how your business did. If you did great, that's a good thing. Because now you can say, okay, I did amazing. And you can think back, what did I do during the month that resulting in this amazing month? Whatever it is, it's working and we need to lean into it. One thing I learned from my own business coach in our community is remember what you know to be true. Remember, it's so much out here like trying to grab our attention, like the new shiny thing and the new way of doing things. Forget all that. If you look at your finances and you did amazing, and it did not involve this new shiny thing that might have just came out, forget about it. Keep doing what you know to be true. And the numbers will tell you, because the numbers don't lie. Okay. But then let's say you look at the finances and you didn't quite hit the mark. One, you wouldn't have known had you not done the analysis. But two, now that you know, that's the great thing, is now you know. A lot of people look at the numbers, or they avoid looking at the numbers because they don't want to know what the numbers are going to tell them. But you do want to know so you can stop the bleeding, right? If you never look at the numbers and you never know, you can go 3 months, 6 months, 9 months. Here come the end of the year, and you're like, oh my God, I should have stopped doing this months ago because it's clearly not working. But if you can catch that in the month, if you can catch that like early, you can start to do things differently and stop bleeding. Okay. So why is it important? Okay. It helps you review historical trends, right? What has worked in the past, what has not worked in the past, what you should be doing in the future. It will highlight your trends, right? You can kind of like get a gauge of like how your seasons work. It identifies strengths and weaknesses. Okay. The bottom line is that it's giving you insight into the business and enables you to make effective business decisions. Now, what do we need to start doing with financial analysis? Obviously, we need up-to-date bookkeeping. Y'all gonna, hey, I'm gonna annoy y'all with the bookkeeping word. I'm sorry, not sorry. Because it is what it is. Okay. But I know y'all feel me on this, right? Because I know, like, when you're talking to your clients and you're saying, hey, if you want this better outcome, you need to be doing X, Y, Z. And over time, that goal can happen. This is the same thing here. Okay, so I know y'all feel me on this, but I am going to annoy you with the booking work, because I'm going to keep saying it throughout this workshop here. But you do need complete and up-to-date bookkeeping. All right. And then secondly, we're going to complete a set of financial statements. Now, if you're using QuickBooks or anything like it, after you do that bookkeeping, it's literally going to be a press of a button. The complete set of financial statements is the income statement, the P&L, those two terms are synonymous, the balance sheet, and the cash flow. These three things tell you different insights into the business. Obviously, the income statement tells you how much you made, how much you spent, how much your profit is left over. You can also determine your tax liability from the income statement. Okay. Think of your tax return as just a huge income statement. The balance sheet, that tells you what your business owns, what it owes to anybody it has like loans or credit cards with. And it also tells you your equity in your own business. And then the cash flow statement will tell you how cash flowed throughout the period that you're looking at, whether that's a quarter, a month, or a year, right? You started with this much cash, it went down to this much, how and why? Where did it go? Okay. There are two types of financial analysis. We're going to look at one of those today, but there are two types. Vertical analysis, that's taking that profit and loss statement or the income statement and it's going straight down. It tells you where the money is going, right? When we look at our income statement, I'll show you this in a second. When we look at our income section of the income statement, where's the money coming from? What's the winner? We got services and we got products. You even break out even more. You can say, okay, out of our services, what are the specific services and how much of that is being generated this month? And then out of our products, what's the specific products and how much of that is being generated in a month? And then we look at our expense section. Okay, where's all the money going? I know I made 10K this month, but I was left with 2. Where did it all go? That's what that vertical analysis is going to tell you. And then you have a horizontal analysis. That lets you know how you did over time, right? So it's comparing this month to last month, this quarter to last quarter, this year to last year, okay? Here's an example of the vertical analysis. You can see here, this is my fake business here. I'm a lash artist and my alter ego here, okay? Like a lash boss, right? And my fake business is called Lashes Are Us. I know, corny, right? Corny. But you can see here my vertical analysis. You can see here we sell lash extensions. That's a service. The lash care kit, that's our product. So you can see here, if we're looking at the month of March, we can see here that services brought in 65% of the revenue. So if I'm thinking about, okay, how can I make the most, like, where is most of my money going to come from? It's going to come from service, clearly, you know? So maybe that's where I should kind of lean into, because I know that's what the people want. That's what they're coming for, okay? Then here I could tell 46% of the revenue is going towards cost of sales or cost of goods sold. And then as I go down this line of expenses, I can see I'm spending 9% on advertising, 5% on professional fees, 1% each on insurance, studio maintenance, and office supplies, 14% on rent. I know y'all feel me on that rent. I know y'all feel me on the rent. Let me tell you, there's top 3 for beauty. There are top 3 expenses I have experienced. 1 will always be cost of labor if you got teens. Okay. Cost of labor, hands down. 2, rent coming in. Rent is coming in at the number 2 spot for expenses where the money's going. And then 3, advertising and marketing. Okay. So it's important to watch those top 3 to make sure they don't get out of hand. To make sure they don't get out of hand. But yeah, this is telling you where all the money's going. I get that a lot from beautypreneurs. I just don't know where my money's going. This analysis is going to tell you real quick. You go down here, and if you're not happy with that, it's time to make some decisions. Time to make some decisions here, okay? Here's our take action for financial analysis. Again, it's going to be the first page, bottom section of your handout here. I want you to, I should have put a step 0 here. Step 0, update the bookkeeping. Because again, you need bookkeeping, okay, to be able to do this. But once you have that, go ahead and create your full set of financial statements. The income statement, the balance sheet, and the cash flow, okay? I want you to take your income statement and I want you to calculate your business's revenue percentage, right? Where is the revenue being made? Split it between services and products. If you have both, if you do not, if you only have services, try splitting it across services. Now, that's going to be a heavy, if you have a very long menu, that may be quite a task. It may be quite a task. So go with the top three, right? Go with the top three services, put everything else in the other category. All right. But just see how are you what is your money hitters? Like how are you mainly making your money? And then calculate your gross profit, right? After you pay either your team or pay for the supplies needed to deliver the product, what is left over? That's going to be your gross profit. And then after you subtract all the overhead, what's left? Your net profit. Calculate that number. I call those the big three. If you know nothing else by heart, know those three metrics. Because anytime you talk to any third party stakeholder, such as a CPA or a tax professional or an investor, or even if like you're applying for grants or loans, they're going to know that. What did you make in revenue and what's your profit, even by percentage? So I want y'all to always know that. Okay. And then I want you to prepare a common size analysis. That's the vertical analysis. It's so many names for everything with accounting. So you can call it a vertical analysis or it's called common size. Just know where your money's going. Okay. Hey, quick note for those of you using a cloud-based system, it will do it for you. These last two bullets, the system will do it for you. There is a report in QuickBooks. It's called, I believe they call it common size. And you can run a report and it'll show you the percentages for each of these items here. Okay, I do have a question.